Good evening. Ira Epstein of Linn & Associates with your SPDR ETF video for this Tuesday, June 9th, 2020, just getting after 6:30 p.m. Central Time. So as we look at these markets, it's interesting. I'm just putting this out now, by the way. If you're my SPDR ETF subscriber, I'm late tonight, but we lost our internet here. We lost all connectivity. We had power, but then Comcast came back on and they said that they had fixed the problems, which they have. But if I don't have that bandwidth, I can't send everything I need. Now that it's up, I can do all this again. To make a long story short, you have the FOMC tomorrow. You don't want to fight in front of them in the markets. At least I don't. That's what I tell my clients. There's a time when you pick up your chips, you go out and you have a great lunch because we can go outside again. You come back, you might want to hear what the Fed does. Then you dust off your keyboard and you say, okay, are there any opportunities? Why? Because you're not going to beat the algorithms. They're going to have every word they look for. They already have their programs ready for word changes and what they would do under certain strategies, and you want to step into that. Best to you. You're not going to beat them. You don't try to beat them. That's not what the game is. You know when to step away from the program trading and then when to join into the party. You can see that we have a lot of markets with some red in it. We have some currencies that were up today. You can see that we have a mixed bag in the spiders, and the stock indices saw a rotation where the QQQ was the strong market today, but the SPY was down, DIA and the IWM, so they gave up to the market. When we look at XLK, which is the tech sector, the last important high we had was 102.94. We got to 102 today, 102.90. Didn't quite get there, missed it by 4. So I've just drawn that line so you have an idea where that high is. This market's had one of the most remarkable recoveries I've ever seen. And it leaves you breathless. I mean, it just came back and it's like nothing ever happened with COVID. We know better, but that's how the market's looking at it. The pattern remains bullish. Higher lows, certainly higher highs. You're over the 18-day average of closes, and the market is using that so far as an important number. You take a look. In March, when you got back over it, it never was able to get back under it for any length of time. It just kept going. Pretty amazing chart. Where's the resistance? That fence that it has trouble with is the upper Bollinger Band. Remember what a Bollinger Band is. It's an algorithm designed by John Bollinger, by the way, that is designed to keep the market trading within it 95% of the time. If it were 100%, it would never get out of the bands. That's the first thing. You want to be able to hit those bands. I've seen traders modify it from 95 to 90. There's things you can do to make it more fit to your technique. But the standard way is this, and the first time you hit that band, or as you keep hitting it, it's a resistance point. Riding it occurs when you just sit on that band and you don't really get away, and that's just a sign of strength. When you take a look at momentum, it's also locked in. The slow stochastics are an oscillator of momentum, and they are unique in the sense that they can get overbought and then convert from overbought to locking in a trend, embedding. Locked in, embedding, same word. I call it embedding. And when the developer of this, George Linn, created it, I went to George, luckily well before he passed away. I said, George, I found something. I need your idea. First of all, I always asked him what a stochastic is, and I got the craziest answers. And he'd laugh. He always wore, like from New Mexico, Southern gear. It was very, very cool. He's an interesting character. And to make a long story short, I said, I'm noticing something when this occurs. He said, I think you're onto something, run with it. And I did. It's that simple. When I look at SMH, this is the U.S. Semiconductor 25 index, same pattern. You got for a while over the upper Bollinger Band. And as I've told you, my rule of thumb is you take each individual day that's over it, and out of that 5 percentage points, say, I just lost one of those. There's a 4%, 3%, 2%, 1%. Okay, you get to that point. The further you're going when it's going like that, the stronger the market's telling you it is. So you have to understand the psyche. The psyche is you might be ready for the market to pull back to the right, but it's also told you how strong the market is. When you take a look at the XLI, the market's now pulling back and looking for support at where we thought the first resistance would be, the 200-day average, but it just jumped it. And now it's pulling back to challenge it. Okay, that makes sense. There's a bit of a gap in there too. Maybe it wants to fill that. In the energy sector, Spider XLE, the market was over the upper band, and I know I said yesterday, wait, this market looks like it's going to pull back into those bands, which it has. Now, you got to keep your eye on the embedded reading here. You don't want to see this red line get under 80, especially on a close. If it does, it's a sign this market wants to retrace, and it could go back to the combination of the 100-day average and the 18 right here. There's another pattern developing that's bullish. This 18-day average is getting ready to jump the 100. It hasn't done that since this whole break. So you've got to keep your eye on the moving averages, because the moving averages have a massive following. They'll call that a bullish crossover. In the QQQ, you just keep running to the upside. So yes, the market didn't keep speed on its gain with the DIA, the SPY, IWM, but that was just a pause. It's still showing, hey, I'm king of the road, and it is. The emerging market ETF backing off, and again, when you have resistance, which we had at the 200 on the way up, on the way down, often the resistance becomes support. Is there anything bearish on that chart? Absolutely nothing. Gold. Gold did not do what the futures did. The futures were able to rally enough today to take out their last rally high. You haven't done it in GLD. The resistance is between 161.87 and that 18-day average of closes, 162.05. Momentum, which had been falling, is now turned the corner. It's trying to point up, but you need bias to go up, and you got to stop this downtrend. As of right now, you've still got the swing line down and the bias down since you're under the 18-day average. We'll see what happens overnight. But again, you've got the FOMC tomorrow. I don't know the traders do too much in front of that. In the gold miners, too oversold to be excited about doing anything down there. The market's last rally high, 33.58. We got to 47 today. If you take that out, you break this downtrend, but you don't start an uptrend. Maybe you can get back to the 18-day average to fight a battle. TLT, you lost the embedded reading. When you lose the embedded reading, let's go to this. You lost it yesterday. The first number that you look for is the closest main moving average. Happens to be the 100 at 157.74. You can see you went through that today. That's all it owed. If you can get to the 18-day average, wonderful. But it did what it had to. I think it negated this run to the downside. Now we wait for the Fed to tell us what next. FXE, fully embedded, slow stochastic, trend up, higher lows, higher highs. You had been running that band. You've moved to the right-hand side. A sign that the market's ready to rev up and run again would be getting back to the upper band. It's not going to be easy, but that's what the market's looking at. Obviously, this market could be impacted tomorrow by whatever the Fed chairman says and whatever our policy turns out to be. You know, it dawned on me. I should be offering our futures newsletter to a lot of you because you trade the gold, you trade the silver. Whether you think you're in an ETF, you're really in a derivative of a futures contract. And you might want to read what we write about these markets. Now, in order to get this, it's simple. All you need to do is go to our website at www.iraepstein.com. You'll see free offerings. You might want to give some of these a try because we cover the energies, the financials being the stock indices, interest rates. We put out special reports. So if you'd like to see it, you're trading a futures whether you know it or not. All you need to do is give us a call, go to our website under free offers. We'll take it from there. I'm Ira Epstein. You have a good day.